Good evening. Ira Epstein of Linn Associates with your SPDR ETF video. And this video is for Wednesday, and we're at the 28th of July, 2021. All right, big day, Fed meeting, Fed announcement first, then we get the press conference. Before I go anywhere, if you want to read about this, this is what I write and how I write for my subscribers when they get my full research. I believe in doing it like I used to read in the Reader's Digest. I know some of you don't even know what that is, but it's a synopsis, and it gives you the highlights of what went on. That's what it is. You might want to put this on pause and then come back to me. Okay. Now that you're back to me, and that's what I'm assuming, that's why I did the two flashes there. You can go back to that and catch it. The impact, as I see it, is the Fed said nothing. That's what I expected. They are clearly talking about tapering. It's a very mixed crowd. The Fed said that, the Fed chair. Inflation, they still believe is transitory. If it doesn't prove to be that, we'll find out, and the Fed has tools to deal with it. The Fed was asked, what does transitory mean? And they did their best to axe it. Substantial progress was another key word that was asked of the Fed. So we're starting to understand what they mean. Simply put, transitory inflation means you get it, but it doesn't lock itself in. Remember how embedding works on a slow stochastic? You can go up in inflation, but it doesn't mean you go up this year, you go up again next year, that amount the next year. It also doesn't mean that you go up in price and that necessarily prices revert back down fully to where they were before, and I'm talking in material cost. That is what they describe as transitory. Substantial progress was a little more difficult. They couldn't give you a numerical term, or Mr. Powell couldn't. It's more of a, hey, look, this is what we see. We think progress is being made. There's not a number threshold that they look at. As for tapering and raising interest rates at the same time, he made it clear that is not going to be the goal in any manner. There'll be plenty of time when you know what things are, and that time is not now. So with that, it's interesting how the Dow did one thing, the S&P another, and where the markets all finished. But let's go to the stock charts to see this. First off, ARK coming back a little. You know, they've been dumping their Chinese stocks, and in China, it appears that all the bankers were called in for a conference to try to calm the markets and figure out what the government is doing as they're making all these rather dramatic moves to basically unlist stocks in America and get them to, if they're going to be listed, to Hong Kong, and dumping by Americans because we're not getting any information as to how these companies operate. But the market did hold up in a sense. You're still in a downtrend. You'd have to take out 123.11 in order to break the current downtrend. The resistance in the market is right where it rallied back to. As we were breaking down earlier this week, this is Monday and I was back in town, said if it breaks from here, you're going to have layers of support between the 200-day average, the 100, and eventually wherever a Bollinger Band fits in. You can see that that's what happened, and then the market came back up today. So that all fit in with what I teach. Notice where the Bollinger Band is, you just missed it, but that's where you're caught. Even if you get back over 123.11, you're not left with a bullish picture at that point. Why? Because you'd have a lower low and a higher high. You'd be out of the bear trend. But I don't say that that would begin an uptrend. And yes, I do think the traders are looking at this as a resistance point, but it's hard to want to bust through all that and think you're just going to keep going. It's not an easy task, especially if momentum isn't pointing down, and it's clearly not. A difficult chart there. As we step over and we look at Apple, as I said to my morning subscriber videos, the quote-unquote, whatever that means, the easy money was back here. The market kept breaking down, allowing you to buy under the Bollinger Band, and kept patterns of higher lows, higher highs. Once you broke through this point right here, that ended that pattern, and you've gone into a chop as the market consolidates. Now, if you looked at Apple's numbers today, they were great. The problem is the forward guidance on the chart. They're already telling you what I've been saying. I've been warning you that They're saying that the conductor problem is going to move into the smartphones. Now, for cars, we hear it's getting much better, but you can only produce so many of these things at a time, and there's roughly a 19-week lead time to make these semiconductors, so it isn't going to happen right away, and Apple warned you about it. But as you know, their phone sales have been good, and I would imagine this new iPhone 13 is going to be good again. In PAVE, well, tonight, supposedly there might even be a vote in the Senate to go to the next level. It sounds like, and we don't know any of the details, but it certainly sounds like from both Democrats and Republicans that the bipartisans have reached a deal and they want to present it onto the floor for further debate. That is not a vote to pass it. Ms. Pelosi said she has no idea even what it's in the bill that they're going to debate. So, how could she say what the House is going to do? And that makes a lot of sense. But how this works in Congress is simple. Don't you dare interfere with their vacations. They have a 5-week vacation coming up on August 9th, and dare you say, Mr. Schumer, we have to be here? What is wrong with you? That is basically what's going on. So suddenly, those people reached an agreement. I'm not saying it'll get all the way through, but I'm saying it made some progress, and you can see how PAVE responded to that with a gain of just about half a percentage point. AMC, well, you've got the trend up, the bias down. You need to close over 40.97 to get bullish again. I don't think the bears are in control or the bulls. The market's sort of just drifting right here. When we come over to the semiconductors, I think, and remember what I teach. What I teach in my enhanced Bollinger Band course, and I'm not going to teach you the course here. You hit that Bollinger Band, there's a reason you come out of your full position. You look at it yesterday and look where you're at today. That's a $10 move. Not a little bitty move, and boom, let all the bears out of the market right where you want. In PODEX, okay, you got up to $12. Now, if you can clear 12.02, it gets more exciting. There's something else going on. We had momentum in this if we take a look together. Did it embed? Both numbers not under 20. Embedding means in the slow stochastic that the two numbers that make up the indicator are going sideways under 20 for several days or more. Day 1, 2, 3. And if you lose it and the number closes over a certain level, well, when it does that, I teach this in the course, I think the market's going to make a run to the 18-day average of closes. We'll see if I'm right or wrong on that. But wouldn't surprise me if that's what the market does. It's also, now in terms of momentum, out of its bear trend. ESGU, okay. We have a market that is trying to develop a bullish embedded reading. We have a market that is, with today's action, now got a pattern of higher lows, higher highs. As a bull, what do you want to see? Well, both numbers were over 80 today. Yesterday, both numbers were over 80, and the day before. So that's 3 days in a row. That's embedding. Now, there's a key moving average that I don't show here that the pros will look at. And my guess is that is the number they'll buy today. It'll be above the 18-day average, but nowhere near all the way up there. And until the red line closes under 80, I think they'll buy and look to see if they can get to the upper Bollinger Band. There's a what-if rule in there. I won't give that to you either. Take the course. It's $75. You learn what it is. You've got higher lows, higher highs. So the market got oversold. It's in a correction mode. Serious resistance from 50.48 to 51.54. While the trend is up, the bias is down, and momentum is corrected out of an oversold condition. If we come to the emerging markets, you've got higher lows, higher highs. This chart turned bullish. It is overbought, which I think would keep somebody like me away from it. But that doesn't mean I'm not in the bull camp until you take out 78.63. We'll see how high it can go. But generally, you get bullish. You need to either embed or work that bullishness off to attract new money. That's what I've learned over the years. Doesn't mean I'm right on what I learned, but that's what I've learned. Gold had an outside day up. In other words, it took out both Tuesday's low and high, closed higher, and closed over the 18-day average of closes. So now, until today's low is taken out, the market's giving you another number that is saying, okay, I'm trying to bottom out here. The battleground has been the 100-day average in green to the 18-day average. If there's follow through to the upside, I'd then look for the market in the 170.85 level to 170.93. These two numbers right here, that's the 200-day average in the upper Bollinger Band, to be where the resistance shows in. The futures charts are bullish, and I've already told my clients, I don't mind telling you that I told them in that they are long. For my paid subscribers. Doesn't mean I'm right. And there's ways to trade these. I don't know if you saw the CME results today. Very stellar. And where are people trading? These micro currencies, these small gold, the bitcoins that are small, they're not trading the big contracts. They're trading the smaller ones. But remember, your ETFs like GLD, they're based on the futures contracts. SLV on the futures contracts. Gold miners threw out a buy signal. Higher lows, higher highs, you're over the 18-day average. So until prices get back under 33.29, I would be telling traders, hey, I'm still looking for more upside in the market. A lot of resistance here. That could be an upside target. No, I am not telling you to buy. I'm making an observation on the chart. TLT. So the high today was 149.67 that did not take out that high. We still have a pattern of lower highs, higher lows, impossible. I wouldn't know what to do with that, and momentum that has gone flat. The bias is up because you're over this average. You had a bullish crossover right here where the 18-day average on the very next day got the bullish crossover. Often that leads to the market trying to make a move higher. Target, probably up there if it's going to follow through the way I think. Doesn't mean I'm right on that. Then we get over to FXE. Well, this reversed the downtrend. You had been, if you take a look at this prior to today, let me see if I can, it's not backing up for me, and I wanted it to. Just not doing it. I'm sorry about that. See if I can get it. Yeah, there we go. This is how the market had been looking through Monday, fighting under the 18-day average. You had lower lows, higher highs, not a trend, not embedding, just staying very oversold. You got up yesterday, and that would have left you with a pattern of a lower low and a higher high. Still not bullish. Something else happened today. Until you take out today's lows, this market suddenly says, hey, I got higher lows, higher highs, potential target, doesn't mean it'll hit it, 111. We'll see if it can get there, but it not only negated the downtrend or no trend, it put itself into an uptrend as I teach charting until it gets under that low. So, let's talk about what I do for you in the mornings. You know, the thing I want to be is your go-to guy in the morning. Why? If you're like me, when I began my career, I couldn't wait to talk to somebody that I thought knew something about charting. And I wanted them, I couldn't wait. Tell me about the gold. Does this chart look bullish to you? I'm seeing a bullish formation. What should I do? Well, I want to be that guy. And not just for the gold, for the other markets that we cover here. Spiders and ETFs, as you know, highly popular. People trade them left and right. And because they're based on the futures, I feel like I'm in my own back alley there. I'm quite comfortable with it. So each morning, what I do is I start off my subscribers, and they're paid subscribers. I won't do this and give it away for free. My paid subscribers will come in. You saw the type of news I write. I give them the day's event, what I think's going on, what's happened in Asia, Europe, and what's coming up for the day in America. I then go into the charts. There's 40 charts or more that I cover each morning. And you saw the different sectors on the different spiders and ETFs that I cover. In addition, I'll cover GameStop, AMC, I'll do Tesla every now and then, Apple. I move it around all the time. Whatever's hot, I seem to want to move to for those, and I'll rotate for you. You get every month, 24 of these videos. They're 20 minutes long, and don't worry. If you watch them on our website, you can pull right to the section you want, and they light up. They tell you, hey, I'm in the energy section. I'm in the stock section. I'm wherever you want to be. I save you time with it. And then you learn I do them always the same way, and bing, your time is saved, and you're right there. $8.95 for all that? I think you can spring for it. Just go to our website. There's more information on this under the word research. I'm Ira Epstein. Have a great day.